1963, 1973, 1981, 2000, 2007, 2019. What happened over this period of time? I'll tell you more in detail, and this could basically inform us that the US stock market may be coming down in next few months. That's why you need to know this, all right? Now, time to lock in all profit on the NASDAQ because I feel that the NASDAQ will come down soon. And we were spot on Tesla, and Yardeni has warned about the current interest rate environment. So a lot of information coming in. Let's go into the video right now. Before we go into that, disclaimer applies as usual, and thank you, Ames, for the kind sponsorship. Now, first of all, let me talk about OXY. I've been a long time I talk about this counter, and I've been telling you guys this, whenever OXY comes down to $56, take some buy position. Yes, buy position. Every time when it comes to $56, just buy, $56, just buy, and so forth. So a couple of days ago, some of my friends and students asked me about this OXY, and I told them the same thing. When you see $56, just buy some OXY. Now, I forgot to do it in the video, so now I'm doing this again. So if you miss this buy, now it's at $58. You want to buy again, wait for $56. Now, this is not a definite mantra for buying, but we do see a repeated pattern. And somehow, it seems that every time when the price comes to this area here itself, right, the US crude oil price will also rebound. So undeniable, $56 can be a good buy. And we all know that, right, Berkshire Hathaway have been buying a lot of this OXY recently, and they bought much higher price too, right? So buying about $56 is a very good bet. All right, let me know in the comment box. Now, other than that itself was Tesla. Okay, Tesla, we tell you to be careful at 265. We share with you that Tesla most likely will come off, and truth be told, at 265, it came down. And when it came down all the way, my first target was 22.3, which the market basically broke below it. Wow, that's bad. And then hangs around at 210. And there was the support level that a lot of chartists are saying that this will be the very important support. It will go up. But I have a different opinion. I said that, right, most likely Tesla result may not be as good as what everyone thinks so. So what happened is that I tell people be careful. And I said that likelihood Tesla share will come down to 180. And truth be told, yesterday Tesla price came down to 180. All right, look at the low of the day. This is amazing, guys. The low of the day, 180, 180. And this is my prediction back then itself a couple of days ago that I believe that Tesla will hit 180. So congratulations for those who have bought in, have shorted Tesla. I think today will be a good day to consider to book some profit because undeniable. We also see the same thing again. When Tesla hits the RSI at near the 30 region, okay, the market rebounded, the market rebounded, market rebounded. Now, of course, if you ask me, if you say that, if the market is going to rebound, so you say we should be buying more NASDAQ. Well, yes and no. By right itself, the market for Tesla should rebound based on what we're saying. But I just don't like the way this time, the way it come down. And yesterday, the huge volume itself is not very good because you see, whenever that happened, right, you can see the volume doesn't really move much, you see. Can you see that? So what I'm fearing is that this could be really a real sell instead. That means that the boys are really selling. And with the Chinese market not doing very well right now, and of course, the Germany market also tipping off, right? I got this feeling that Tesla may actually see more selling. Now, it will rebound first, okay? They will rebound first, as I say it will. But then again, I think they'll come back down to 155 in a couple of weeks' time. So that is the reason why I'm not that comfortable to hold the NASDAQ right now. Okay, that's my view. Let me know in the comment box. Now, one thing is this. We all know that in the past, there's this thing said about BTC, right? Bitcoin versus the US market. And always, it seems that the Bitcoin momentum or movement will follow with the Dow. And the thing is this, we can't deny this. You can see that most of the time, when the Bitcoin goes up, the Dow goes up. Okay, got an idea now? Okay, pretty cool, right? So it happened again. Okay, happen again. And if the Bitcoin goes down, the US Dow goes down. Okay. So the thing is this, recently when the Bitcoin was surging, okay, all the way up, that was cool. The Dow Jones also went up, right? That's right. But the thing is this right now, the Dow is just staying in about 38,000, but Bitcoin has came off quite a fair bit down to about 40,000. So if you ask me, there's a bit of divergence here itself for catch up. And if you look carefully over the longer period of time, right, it seems that, right, it does seem that if Bitcoin goes to certain places, the US Dow Jones will follow later. So if that is the idea, then that means that there's a very high possibility if the Bitcoin's not going to go up, the Dow may really come down to the 36,000 500 area that I have been advocating over the last few days. So what do you think, guys? Let me know in the comment box. Do you think that the Dow will go down to the 6,500 or the Bitcoin going back to 50,000? Now, put that aside, let's talk about the Federal Reserve. Okay. Now, the Federal Reserve roles and responsibility, we know that, right? It's a central bank. Okay. They have child regional reserve banks. They have this Federal Open Market Committee of them, I think all 19. And then the Federal Reserve Board of Governors. Okay. So these are the people involved. Their main job is to set interest rate, maintain financial stability, foster efficient payment system, and promote consumer protection. Okay. But of course, the main topic today is set interest rates. All right. So Jerome Powell has been talking about this. Now, in my A-level time, when you took private A, I mean, my teacher asked a question, guys, when there's interest rate is going up, what will happen to the stock market? So generally, we all know that interest rate and the stock market have an inverse relationship, okay, according to all the textbook. Hence, therefore, when the interest rate goes up, share price supposedly go down. All right, but the thing is this, if you look at the market over the course of time since 2000, and every time when the Federal Reserve increased interest rate, we saw the stock market going up. Even at the high, when they increase interest rate, the stock market continues to go higher. So you notice that every time when the Federal Reserve increase interest rate, the stock market goes higher, not lower. So based on this statement again, if interest rates goes up, share price goes down. So what will happen if the interest rate goes down? So by right, the stock price will go up, right? But again, can you see that it doesn't really happen? As a matter of fact, whenever the interest rate goes down, the stock market goes down. Okay. So now you understand why a lot of people are very happy to hear from Jerome Powell and friends that there will be a rate cut coming in. So although we can say that, okay, there are now the chance of more rate cut coming in, okay, and the stock market have been very strong recently, but I believe that this is just going to end very soon. So let's take a look what happened now. In the November last year, 600 bankers were interviewed and asked about their outlook of the interest rate environment. 60% of the bankers believe that the Fed will not cut rate until the second half of 2024. In fact, 22% says that there'll be no dropping of rates until 2025. But 1 month ago, Jerome Powell says that cutting rates premature and says more rate hike could happen. But just 18 hours ago, all right, apparently it seems that the market is expecting spring cuts. So the question is this: why would the Federal Reserve cut interest rate right now when they're combating inflation? Now, if the unemployment data is so-called rising but not scary, the GDP numbers are good as we saw last night, and things are going well, earnings are doing well, then there's no reason for the Federal Reserve to cut interest rates. You think about it, because the primary idea of cutting interest rate was because to basically combat inflation. And inflation at the moment is still pretty high, right? So there's no reason for the Fed to really cut rate. So the thing is this right now, let's go back into time since 1955 until now. Then you let me know what you think so. Okay. So you can see that every time when the Federal Reserve increase interest rates, you can see that to a high level. Okay, that's where it goes up. And you can see that almost every time when the Federal Reserve increase interest rate, after a while later, there will be recession. That's denoted by the gray area. Okay, so get the idea now. Now, the thing is this: do you notice at the moment when they cut interest rates during the recession period, this is where we can see that the market is definitely in a recession. So which means that when the Federal Reserve cuts interest rate during that period of time, you notice that the recession period is quite long and they'll keep on cutting rate, keep on cutting rate, keep on cutting rate. The shortest period was back in 2020 during the COVID period, right? So the question is this: why would the cutting of rates be an issue? Because this should be good for the economy, right? But if you put into the stock market, you will notice that it doesn't really spell the same thing. So if you look at it right now, this is a CNBC televised interview on Yardeni. He says that the Federal Reserve is going to make a mistake by lowering interest rate. And I totally agree with this statement. Now, who is he? Now, he is the president and chief investment strategist for Yardeni Research. And you heard of this before. It's a very reputable research firm, and they do a lot of forecasts. I would say that overall their forecast is quite decently accurate, about 80 to 85%. And what reminds me was because of this interview back in January last year, whereby he was on Bloomberg and they asked him about the stock market. Now, back then itself, including myself, I'll be honest here, I thought that the market would be coming off, right? But no, in fact, he said that in January last year, he says that We have made a low in October last 2022, and this was the end of the bear market. Wow. And I think we are back in a bull market. And basically, he was spot on because 2023, the market went all the way up. The S&P was trading at 39.49 back then during this interview. Today, we're now near almost the 5,000 mark. So basically, he's spot on. And that's the reason why I brought him in the picture again. So what he's trying to say right now, he believes that, okay, there is a, although the economy is very good right now, but then if the Fed cuts, they run the risk of fueling an asset inflation and a possible recession. And I totally agree on this statement. But of course, interestingly, the former St. Louis Fed President James Bullard, we all know that he was is no longer in the FOMC committee, but he says that right, the Fed to begin lowering interest rate before inflation hit 2%. He believed that cut as soon as March, and he will say that the core inflation rate will slow down to 2% before October. So the thing is this, I kind of like, this guy was one of the most hawkish guys during the meeting, and now it's not inside there itself. So what he says is usually contradict a little bit, but I just feel that it's like telling people that, to be careful. Okay, so when all this tells me, I look at the numbers, all right? So Yardeni says that, right, the speed of the S&P rally now is really fast. We saw that from 4,002 to 4,009, the market went up 700 points in less than 3 months. So that is very fast for 25%. So the thing is this right now, everybody is like looking at it. Okay, look, okay, should be careful. Yeah, indeed. So this, Yardeni says that right now, right, the 24% rally, all right, is really fast for last year. And of course, he didn't see coming. In fact, itself, right, he says that this, his forecast for the end of year is 5,004. But because of, even though he's predicting an upside, he feels that the bulls are too fast. And this momentum itself, if you catch the wrong side, it may cause a big problem because due to a sudden changeover or revival of the risk appetite across assets, then this will actually change. We all know that usually when the stock market is flying out, rocketing very fast, usually how fast it goes up will be how fast it will come down. If it's staggeredly going up itself, actually a good sign. So I also agree with this statement, and hence, therefore, I think that it's time to book some profit on the NASDAQ. Now, I told this from a YouTuber, and you can see that, right, he did the mathematics for you guys. So you see that every time in a Federal Reserve pivoting, meaning they cut interest rates, right, you can see what happened to the stock market. In 1969, it dropped by 36%. In 1973, down by 48%. In 1981, down by 27%, and so forth. So based on this itself, right, you can see that the moment the Fed starts to pivot, right, the stock market will actually come off. But more important is, before the Fed pivot, you can see that the market will hit a historical high first, then there'll be a wave of selling, then the real selling. Try again. After historical high, recovery, and then selling. All right, historical high, recovery, selling. Got the idea now? So that means there's 3 waves that usually happen after or during the Federal Reserve cutting interest rate. So again, it happened again back in 2000, market go historical high, then the market shoot up all the way without stopping. And then when the first sign of cutting rate itself, the market dropped by 51% in year 2000. And of course, during the Lehman crisis, this was where the market go to new high. And then after that, when the Federal Reserve cut rates, the market nosedive by 58%. So it seems that, right, it's just not a coincidence of cutting rates and then causes the stock market to fall. In fact, it's something that probably we won't know now, but the boys knows about it, and they decide to get out of the market because they don't want to be caught at the top. And the retailers are jumping in the market because they see that there's no fear, there's no worry sign, everybody is good. That is where the main worry is. And because of that right now, right, you can see this is the NASDAQ chart that I have for you. Now, I don't like the movement right now because you can see very clear we have 2 days of black candle. And that's not a good sign because we have seen it before. 2 black candles, usually we see some selling, right? 2 black candles, we see some selling and so forth. So to me, it's all right. I think a pullback on the NASDAQ is kind of possible. So if you ask me right now, I think the NASDAQ will pull back to about 17,000 in the near term, or about 500 points drop, and then it may stop for there for a while, but if failed to hold, the next target could be 16,250, all right? So this is my call on the NASDAQ. So let me know in the comment box, all right? But of course, you will say, "Hell, look at it. The GDP has grown an annual rate of 3.3%. It's better than the 2% expected. So why you need to worry about?" Exactly what I'm trying to say. Now, if the GDP expanded so well, so good, and like basically no recession, then why the market is not reacting? So it could be just selling on facts so that they can take some profit? Well, it could be. Or is it because they know that somehow some artificial support has been done to make the numbers look good, so the retailers goes in and then get caught while the boys sell to them? What do you think about this analogy? All right, so if you look at this right now, the VIX is still right, despite the US market still trading up yesterday, the VIX itself went up, and you can see that it's off the support level that we draw, because every time when you hit this artificial support, right, almost every time you can see that the VIX will go up. But this time around, it didn't even come near to it and it started to go up. So hence, therefore, I believe that VIX will hit 17 within the next few weeks. All right, I believe that. And of course, when the VIX do hit 17, that means mathematically we should see the Dow Jones on the NASDAQ down by at least 3 to 5%. All right, that's how I see it from my perspective. All right, hopefully I'm wrong. For those who are bullish, I know you hate me for that, but I'm just being facts and figures. And of course, to wrap it up itself, right, let me show you my indicator. You can see very clearly that we have a very important information. Now we have a potential CCYR, yellow to red, on the day chart happening soon. That's why we have the red arrow. And of course, the KSI, which is a big boys indicator, is selling, although the KRW and the momentum is still bullish. So I think that it's a good time to take some profit. Now today, the support level 17,423 on the CFD side. If the market breaks below, the first target could be at 17,33.9. Or if not, I think this is the number that I'm looking at. I believe that this will be something that I want to see. That's about 17,000 for the NASDAQ, because it also happened to be nearby the MA30. So with that information, I cannot believe that we should be able to have a little bit of movement down on the NASDAQ in the near term. So let me know in the comment box how you think about what I shared today, and hope you like my sharing. Till then again, this is Kel signing off. Like, subscribe, and share my video. Bye-bye.